Hey everyone, how's it going today and welcome back to another episode. So in today's episode, I want to talk a little bit about GameStop again. And you can even say this really just applies technically to almost every one of those meme stocks that a lot of people were chasing over the last couple of weeks. GameStop, AMC, BB, no, like Nokia, you guys probably know the drill if you guys have been here for a while. But the general idea is because I did make a video maybe about just a week or two ago talking a little bit about how GameStop was a stock that a lot of people were just getting ridiculously rich like over it, and it was really an opportunity of a lifetime, because it was something that I kind of like recommended in the beginning, but keep in mind at that time period the price was still relatively cheap. Now afterwards, as you guys probably know, is that the sad thing is that while there were a lot of people that thankfully were probably able to make a fortune out of it, there were probably also a lot of people, even more true if that you were someone that was a little bit of a latecomer, that actually sadly lost a lot of money. So you either made a fortune or just, let's just say, on the total opposite side. But I want to talk today a little bit about whatever really ended up happening with GameStop, why it particularly crashed, and I guess you can say what really led to what happened over the last, like, basically 1 week, ever since the downturn that really happened, basically whatever ended up leading up to that, and whether or not it's still something that I think is still worth it to kind of invest in. But real fast, before we begin, if you guys are brand new here, remember to smash the like button, even though I know that this was probably a little bit of an uneasy news, but it always is greatly appreciated because it does help to support this channel. Consider subscribing and hitting the bell notification. We are dominantly a little bit more of a stimulus channel, but the big umbrella is we're technically general finance, so we will be making a lot of videos centered around the stock market, investing, or anything like that on top of the stimulus videos. So if you guys are brand new here and interested in that, which hopefully if you guys are here, you guys have some interest in it, feel free to consider subscribing and hitting the bell notification button, and feel free to comment any, really honestly, just any questions, thoughts, or really just anything at any time. Maybe what was your guys' experience in terms of really with GameStop, AMC, BB, Nokia, any of those meme stocks, because it has been a pretty epic, and I think again, like, most people either made a fortune or sadly there were a lot of hard hits, but we're going to talk a little bit about that. So as you guys probably know, if you guys hopefully did some level of research back then, is that GameStop was basically a stock that was supposed to go through a short squeeze. I explained it a lot more in one of my past videos, and I'll probably put it at the end screen as well. I think it's physically called How Someone Turns, I think, 50,000 into like a million or something like that. But basically the idea is that a short squeeze is basically when I guess you can say in this case a hedge fund takes out a loan, or they basically short a stock betting that it's going to go down, and they're basically going to repay the owner of the stock, but in the actual stock, with the assumption that the stock is going to crash. But because they kind of over shorted it, what they did is that they basically pumped up the stock, and at the given time, if you were someone that kind of followed GameStop from before it started making headlines all over the place, basically let's just say that something below $60, then you probably have heard. Now, what's beautiful about GameStop is that there actually is a fundamental reason to why it's actually a pretty solid stock. So not just like some kind of pump and dump, at least certainly if you were someone that got in before then, because there was actually a lot of fundamental stuff about how GameStop was trying to make a comeback. Ryan Cohen, the CEO of Chewy, a lot of different stuff. We can talk a little bit about that maybe another time. Maybe consider subscribing or commenting if you're interested. But the general idea is that at that time period, I think that there was a lot of hype that people were really trying to pump up the stock, and it worked. There was a lot of confidence that really ended up happening, and I think at that time is that if you came in early, within a single week, I believe that stock literally went up almost like, I think, like 10 folds or something like that. I know that at its very peak, and I remember screenshotting it somewhere on my phone, maybe I'll even have the screenshot, that I think it recorded that within a 1 year time frame that stock went up over 90 folds. You could have literally turned $1,000 into almost $100,000, which is probably the most insane thing. I mean, there was someone, if you guys saw one of the previous videos about how someone turned $50,000 into something like, in, let's just say, the millions. However, the sad news is that, as most of you guys know, is that as the stock started to really like rise and skyrocket, there was almost definitely momentum that it could have crossed the $500 mark. And I think it actually did, but it didn't happen during actual trading hours. During trading hours, I think the peak was something like slightly under $500. Based on the momentum that it was really, really moving, it is very, very rare you will ever see a stock that does something like this and then just suddenly plummets. You might, like, it'll happen with penny stocks, but like most of the time, even then, you're probably more likely to experience something like that. So it'll be fast, but not like a sudden, especially during a midday reversal where suddenly it's at like you're in the middle of lunchtime and then suddenly it just goes like that. What really ended up that day, I think, is that the reality is that GameStop was a stock that actually had a lot of fundamentals with the short squeeze to hit well over $500. In fact, a lot of people are very, very convinced that if everything had sailed smoothly, GameStop probably could have actually even broken $1,000. I really do believe that. And I think a lot of people did believe that there really was potential. And it should have actually. So in terms of what really ended up happening, the story of what really ended up happening, and you guys can probably already know about it, is really because of the Robinhood. And I think that a lot of people were wondering about what really caused it to finally crash, and is the short squeeze currently going to be happening? The answer to the short squeeze part is that, in my personal opinion, it's not likely, but maybe. However, I don't know if I can ever foresee it going back to that level again. And the big reason why is what people really speculate why I think the short squeeze was sabotage, or certainly didn't live up to the full potential. Because it technically, kind of did happen, certainly a gamma squeeze of some kind. But I think the story about what really ended up happening is that as soon as Robinhood did the blocking thing where they kind of, blocked out trades all of a sudden, this is kind of by logic that, if people cannot buy the stock, then there's probably no way for the price to physically rise. This is literally what ended up happening with the pandemic back in March of last year. If you guys remember, this is kind of just logic. If you have like an underground mall, or honestly just a shopping mall, and you have a bunch of stores, but then suddenly it becomes illegal to shop there, or everyone's forced to close, or everyone's forced to leave, restaurant, dining, a lot of places had restrictions, then by logic, if no one's allowed to buy a certain thing, then the prices is going to crash. And I think that was what really ended up happening. Is it was because so many people were trying to buy, and it was going to pump up the stock, and they wanted to buy. And then what really ended up happening is that as soon as Robinhood blocked it, obviously, and it wasn't really Robinhood, technically several brokerages, as soon as that ended up happening, Robinhood and a lot of those brokerages basically caused the price to basically plummet, because if no one can buy, then it's almost unlikely that it's ever going to rise. Now, what ended up happening, I think, was that once it plummeted all the way down, I think it went from like 4 something to a little bit over $100 or something like that. It did technically make a bounce. This part is kind of speculation, but a lot of people predict and feel that it's very, very likely that during that time, a lot of these hedge funds possibly used this as kind of like a opportunity, and they possibly used it to now cover a lot of their short squeezes. I know that there's some people that talked a little bit about the volume side, about how, is there enough volume to kind of do all that movement? And the answer is that it's very, very likely maybe they didn't necessarily do it in one sweep, but they maybe did it gradually over time, very discreetly as it dropped. So it was enough to really be able to pump up the price. And then I think on top of that, when the price dropped, because if no one's allowed to buy the stock, then naturally the prices are going to drop. But I think also when it spiked down so fast, it probably also led to a lot of people to actually also panic sell. And I think it's a very, very common thing, I think, is that when you start to see a stock and it really, really rapidly crashes like that, this is even more true if you are someone that maybe bought it at some expensive price, like let's say over $200, but especially over $300, $400. Sorry. But basically, especially if you bought at a very high price, a lot of people that did it at that time likely panic sold and kind of got out of the stock. So when you combine with like everyone basically being forced to not be able to buy, and then everyone else is basically just selling, and the only one that's buying is really just the hedge funds, which is they're trying to basically pump up the stock. That was what really basically sabotaged the short squeeze, or certainly sabotaged it in the sense that it didn't go to its full potential. But the general idea is that there's basically absolutely no coincidence when you think about it. The fact that the stock really just crashed immediately, right timed, right when Robinhood basically blocked out trades. And I think on top of that, what made it even more difficult is that because even once they did block out trades the day that it crashed, over the next couple days, they still continued to restrict trades. I think at one point, like, I think Robinhood even made it where you were only allowed to even own, not necessarily buy, but physically just hold one share of GameStop, unless you already held it from before. So I think that definitely didn't end up helping either. And then I think on top of that, there were also a lot of people that basically left Robinhood. Maybe comment down below if you're one of them. I might make future videos about like explaining different brokerages, so definitely subscribe if you guys haven't done so already. But the general idea is I think that definitely didn't help at all. So when you basically have like a mass wave of people that are basically blocked out from buying, and then you basically have it where other people are basically panic selling, you're basically manipulating the price to go down. So really the bottom line story about what it really is that if anyone's still wondering about what really ended up happening, you can even say, as sad as it is, that it really was that the reason it really ultimately crashed was because of Robinhood. And I think what was even more impactful is that because of Robinhood, what they did, even if you're someone that does not actually use Robinhood, like interestingly, I actually didn't even own GameStop stock in my Robinhood account. I actually owned GameStop in another, I owned it in my Schwab account. But the crazy thing is that because even if you were someone that was protected and was actually allowed to basically buy or trade, because so many of your fellow other retail investors were not able to do such a thing, we all, maybe we don't share the same brokerage, but at the end of the day, we do share the same market. And so I think that in the end, regardless of whatever brokerage, obviously if you were with Robinhood, it probably impacted you the most. But the sad thing is that regardless of whatever brokerage you had, like I was actually able to trade the entire time when most people were. I was able to basically buy GameStop. But the reality is at that time, because of what had happened, regardless of your brokerage, every person was impacted because we all share the same exact stock market. So when the price goes down for one person, it basically goes down for everyone. And I think that what was really particularly, I think, emotionally hurtful about that incident wasn't really just the fact that a lot of people necessarily lost money, although that was true too. But I think that what was really even more emotional was also just how it actually physically happened, much more than the fact that it happened. Because I think if this was something where, you know, maybe like, you know, people drove the price up and suddenly they just didn't time it right? And they got out, then maybe that's a little bit justifiable. But what really ended up happening, honestly, is nobody foresaw that they were suddenly gonna just block out the trade like that. Nobody foresaw that it was just, they were suddenly just going to put a wall all of a sudden and make it so nobody can basically buy, yet the hedge funds can continue to buy because they were able to have special access to cover their shorts. Meanwhile, none of us, we were basically all froze in the sense that we weren't able to buy even over the next couple of days. And even when you had people basically have like an exodus from Robinhood to go into other brokerages, the issue became is that those couple of days, there were definitely, first off, some people that maybe panic sold once they saw the crash down. There were probably people that maybe sold just so that they could get out of the position and so that they can buy it in another brokerage, which again certainly didn't help. And then the fact that there was also a lot of people that stayed on Robinhood thinking that they would eventually allow trading, and they technically did, but then over the next couple of days they basically limited it to where you could basically only own somewhere between 1 to 5 stocks. I think that was the limit. Like, if maybe comment if you guys remember. And that regardless, is that even if you were not impacted in the sense of whether or not you could buy or sell, is that you probably experienced the same exact stock market. So when other people are not able to buy, you'll probably, well, us will have to sadly see the prices really tank. And that's what really ended up causing the entire kind of GameStop. You can even say maybe Robinhood was basically more or less, in my personal opinion, the most responsible for what had happened. And this is coming from someone that actually really loves Robinhood, but at least certainly before this. I actually really, and I think a lot of people do feel that way as well, that if not for that Robinhood incident, it really could have been an opportunity where we would have made even more, let's just say very more rich people. But I think that that's what really sadly ended up happening. I think it was just because in the end there was a lot of just price manipulation, and I think it's actually illegal too, you know, because they did discreetly, you know, they I mean, this is almost like, imagine if you walked into a casino and someone just pulled the fire alarm, but the dealer or the house continued to play. You know what I mean? It's kind of like if you ended up playing a poker game or any kind of game, honestly, and you suddenly just forced everyone to kind of sit still and they're not able to do anything, but the house continues drawing or continues playing or continues rolling the dice, then of course, you know, they're probably not going to win. And this is probably going to be the most, like, screwed up but sabotaged way that they really did it. But that's really what sadly ended up happening with the entire GameStop short squeeze incident. And I think that part of the reason why I actually really think about why I think it was a particularly very emotional moment, and it was very, very sad what ended up happening, is not actually just because of how many people that lost money, but I think it was even more so about how people lost money. Because I think that if this thing pumped up and people just didn't exit in time, that was maybe, you know, reasonable. But nobody thought, you know, that suddenly, you know, it was going to be a thing where Robinhood and just brokerages in general would just suddenly restrict trades and block everyone else. I mean, I don't think anyone could have foresaw such a thing from happening. And I mean, that's what really came up. And I think the real sad thing is just because of the fact that you basically had so many, if anything, maybe millions of people that basically downloaded an app and spent time basically preaching that app, and for that app to basically at the very, very end turn on almost every single person and just basically end up supporting the hedge fund at the cost of, let's just say, for some people, thousands of dollars from, like, basically people like us, retail investors. And it's even crazy because, you know, the name of the app is Robinhood, so it's kind of crazy what ended up happening. But that's really what I wanted to share in today's video. So I really just wanted to kind of explain what happened with the Robinhood situation about the short squeeze. I don't know if I can see it coming back. I do believe that maybe it will bounce, but I don't think if it did bounce, it's going to be because of any kind of squeeze. I think it's probably going to go up much more based on fundamentals. We will probably know a lot more when we get the short squeeze report, which comes out every single 2 weeks, which shows that basically it just shows how many short interest are basically still left in them, or how many shorts they still have to basically cover. So we'll likely know then. But I think even then, the general idea is that if nobody buys it and if everyone's already kind of walking away or they're running away, it's not likely it's really going to bounce back. So I think that that is the really, really sad news about the situation. But that's what I really wanted to talk about in today's video. Remember to smash the like button if you hopefully found some insight, even though I know it might be hard news, but you know, some people still want some money at the end of the day. Consider subscribing and hitting the bell notification for other kinds of finance investing based topics. Do notice is that we are probably going to be making a lot more videos centered around stimulus, unemployment and stuff in the near future, but we probably will transition to a lot more if you guys are interested in staying tuned for that. And feel free to comment any questions, thoughts, or maybe really just your particular experience, or really just honestly anything else. So with that being said, thank you guys so much for watching. Stay safe, stay well, and hope to see you guys next time. Thank you guys so much again.